Yeah, okay, that's the introduction to this topic, accounting. Yeah, it's a difficult topic for anyone. Even people running businesses have a problem grasping this topic, I think. But in essence, it's not that complicated, really. Which some of you might have read this. It's a document in First Line Forum accounting folder. So you can review it there later. But we will use the analogy of a family household to understand the concept of accounting. And we will use this as a base. Okay, so accounting or bookkeeping, bokföring, redovisning, same thing, is required by the authorities for tax purposes. So that's one big reason, right? You want to keep books. But it also helps the company to keep track of incomes and costs, incomes, outcomes. It's not very different from how a family could keep track of their expenses. And we will use that as an example. So if you and your family, you want to keep track of how you spend your money, you will start categorizing costs, right? So they want to stay within budget, and they decide, okay, we have this notebook where we will put every expense. And they create different categories. Food, travel, what else? Rent, things like that. So what happens now whenever they spend money, whenever they go to the supermarket, the total or balance for the food category will now increase, right? So let's say we go to 7-Eleven, spend 100 kronor, go to ICA, spend 50 kronor. That's how it would look. No.
I'll explain each.
Right. So very straightforward so far. Let's say, okay, this was not correct. So of course we could cross it out, but we could also say ICA minus 50 kronor. And instead we put ICA, it was actually 80 kronor. So we even have a log of our changes and everything. Fine. But what if the family also wants to keep track of their income and savings? So this so far is only our expenses, right? So, 800, how much is it nowadays? Okay. So these are expenses, but now we also want to know how much money did we make as a family. What do? We add another category, another list in the notebook, which we call bank account. Fine. Bank. So whenever I get my salary, I put salary 100. The family now has an easy way to keep track of both money at hand and money spent. And it's all in one place, in the notebook, right? Okay, double entry bookkeeping. Now when the family has added this one, they quickly notice something, that whenever they go to the shop, spending money, ICA, okay, ICA 100. What happens here in the bank? We just lost 100 in ICA. So any event taking place, any transaction will obviously affect in two places. So because of that, they make it a rule now, the family, that whenever we touch the notebook, we cannot change in one place without also changing in another place. That's the double entry rule, let's say. They do this as a kind of quality check. So if you have a positive amount in one place, you have to have a negative in another place. Balance zero. All right? Okay. When they register a positive amount in a category, they decide to call it debit or plus. When they register a negative amount in a category, they call it credit or minus. So for every transaction, the total debit amount must match the total credit amount. So that's what we did here. We put the debit amount plus 100. Why plus? Well, you can look at it. The food expense increased with 100, right? What happened here? Minus or credit 100 in the bank account. So it would look something like that. But now, what if the family went to the shop and spent 100, but now they also bought some sweets? So they want to keep that separate. So they spent 100, but 50 was food and 50 was sweets. Fine, no problem. Here it's still 100, lost from the bank. 50 ended up in this category, 50 in the food category. Straightforward. So it's not a problem then to have multiple categories in one transaction, as long as the total balances, debit balances with credit, or plus and minus. What then if the family would receive money? So far we've just spent money. Okay, we received the salary here, but you notice we never applied the double entry rule. We just put the money there without having, so it was actually a plus, but we didn't have a minus. Where did the money come from? So because of that, the family now decides to create two new categories. Employer and sometimes they get money from grandma. So now they can stick to their double entry principle, meaning whenever they get money from somewhere, grandma, 100, it means they have a place to put the negative amount. Grandma, minus or credit 100. What does this mean? Well, like it says here, if grandma continues like that every month, by the end of the year, they have 1,200 more here. Grandma has lost, she's on negative 1,200. Does that mean that she has no more money to send or to share? No. It's just a representation from the family's perspective that from our context, grandma has lost 1,200. Same thing with the employer. We'll keep ticking here. Good. So question then is, how is a company different from a family? Just a note here first. Since all of this represents the family, right? We are not trying to make notes about how the employer spends his money or how grandma spends her money or how much money she has. It's just a way of showing in relation to us as a family, grandma has lost this much. Because of that, a minus here doesn't mean that money is lost. since it created a plus here, right, in the bank. So when we think of these categories, we just need to be aware of that a negative category doesn't necessarily mean that money was lost or that it was a bad thing. It was actually a good thing. So how then is a company different from a family? This we call a notebook for the family. A business would call it a ledger or a journal, possibly. As in Swedish, huvudbok, I believe. So same thing, a book where transactions are entered. And that would in English be a ledger or journal. So the transaction itself, whenever something happened and we make an entry, is therefore a journal entry. Fine, the family have those categories: food, travel, rent. A business would not call it categories, but ledger accounts. So this is a ledger account, this is a ledger account. And they would of course have other types of accounts, maybe still rent and travel, but here what staff or office costs maybe, not suites. And they would also assign a number, probably, to each account, at each ledger account. Just something to make it unique and distinct. So
some of these numbers are actually numbers that, like in Sweden, there is a number for a specific category.
There are standards.
Standards, yeah.
In Swedish, bokföringsplan. Konto. Yeah, so this is the bokföringskonto, ledger account. But then you have a plan, like a system or a standard, with a set of given numbers. So whenever you deal with staff, use the range 25 to 30 or something. But that is not critical, and even if there is a standard, you can any business can make their own. So yeah, but you recognize this, of course. You've seen in the different hotels they have put some type of ledger account. Sometimes it's not so. Yeah,
I think it's even in a business, it's more important that it's a word or a description of the, like with 7-Eleven.
A clear description.
More than a random number tells nothing.
So there's no use or a need to make the hotel use certain numbers or to point out that you need to correct your ledger accounts. But for those who are new, we should also say that Sirvoy, we don't deal with accounting as such. So we move over here. Sirvoy is here, and what do? We do bookings, but we also create invoices, right, or receipts, and those are things that need to be accounted for in the bookkeeping. So we simply just export a report. We will come to that. But that's the context where we need to have some names, descriptions, ledger accounts. So we ask the hotel to put, for a room type or an extra, which ledger account would you like to use for this? So whenever you sell this, what should we put? When we export, what should be put there? So that's what the ledger accounts are about. Fine. When the company receives money, we talked about the family receiving money from grandma. But now with the business, of course, it would rather be sales. And in English-speaking countries, usually it's 4,000, the standard default number, but it could be anything. It could also be just sales. So let's say we have that ledger account sales. What happens now when the business receives money? What will happen in the bank account? Jack?
Positive value
Positive.
and negative in sales.
So we receive money in the bank, that is the debit amount with the plus, and in sales, negative. So again, you notice that a negative balance in sales is not a bad thing. It's a good thing. The more minus, the better. The more sales. And that can be a bit confusing, but it's just a fact. So a good way to help you think of where should this go? Is it positive, negative? Start from this side, the bank. What happens in the bank? Did I lose money or get money? So if it's plus in the bank, it means it has to be minus on the other side, since it has to balance. Multiple ledger accounts in one transaction. Just like we did with the sweets, food and sweets, when the family was going to the store, same thing can happen when we sell things as a hotel. Or for that matter, buy something as a business. We buy many different items. It's one transaction, but we separate it into different ledger accounts. But same thing when we sell. So I'm a hotel, I have just sold a booking, but it contained a single room, a double room, and a dinner. And I'm not satisfied. Of course, that totals to what? $30. So I could just put 30. But what if I later on want to know how much did I make on selling double rooms? How much did I make on selling single rooms? So because of that, I create not just one category for sales, but I create sales double and single. Sales single. So now I have a way of two ledger accounts to distinguish what kind of sale was it. So 30 here, 10 here, 20 here. So it's not a problem to have many different ledger accounts in one transaction, and that's the reason why you will find that whenever you edit a room type, you have the ability of putting a ledger account in Sirvoy on that room type. So whenever that booking with the room type becomes an invoice, we can include that ledger account into the report, which is given to the hotel for them to take to their accountant or to book. So accounting reports, that's the closest we get in Sirvoy to doing actual bookkeeping. We don't offer a system that includes accounting. That is something for the hotel to take care of, but we assist them by creating these reports. So a hotel might, okay, let's take the family first. They go to the supermarket 10 times on the same day for a party or something. Each time they spend $10. So of course they could make 10 entries now. Or they could just sum it up and say, okay, today we spent 100 at the shop. So, and maybe they make that they sum up those 10 purchases on a separate note, which is kind of a report, right? A report of today's shopping. So something similar is what happens when we export from Sirvoy, a report holding not just one, but all the invoices, all the sales that the hotel did, if it's for a day or a month or... So it's a summary. The account reports that you can export from Sirvoy is a summary of all the sales for a specific period, which means sales on one side and bank on the other. Okay, now it becomes a bit complicated. Accounts receivable, is it a familiar concept or word? Kundfordran in Swedish. So, what is that? Imagine that a friend of the family borrows $100. The money was taken from the bank account, okay, minus 100. And the family is now worried when looking in the notebook because it looks like they have no money. They lost 100 and we haven't entered it anywhere else, right? So they would like to somehow make this loan or money owed to them show up in the notebook. So they create a new category here. And they call it money owed to us. So it was minus in the bank. Now it's plus there, 100. Great. So now they have a representation, an abstract representation of this money that is somewhere, but it still exists. It's money owed to them. A company will do something similar. When a company creates an invoice which will be paid at a future date, they can choose to consider this as money owed to them. In other words, the sales has already taken place, even though the company has not yet received the money in the bank account. And for this purpose, they will use a ledger account called accounts receivable, which basically means money owed to us by customers. So let's say it's today the 4th, and I create an invoice. I could choose, and it's a choice, at least in Sweden, it's a choice based on how much money you make. You can choose to use this concept of accounts receivable or not. But let's assume we do, and most businesses do, I believe. What happens? Today is the 4th. We do that sales, okay. So that means here double sales. We sold a room, that is minus on sales 100. Where do we put that money? We can't put it in the bank because we haven't yet received it, but still we want it to be in the books to show that, wow, this company is a good company because they have money owed to them, expected to be received soon. So they use this account, accounts receivable, plus 100. Meaning when the business now wants to know how much money do we have, they will look, of course, at the bank, but they will also look at accounts receivable to know that, okay, next month we will have what we have in the bank, but we will also have received this much money. So it's used as a way of being in control, knowing what's going on. Good. So we have that example there. This means that the invoice will be registered as money owed as soon as it has been created. Now that can be with some delay, of course, in Sirvoy if you export a report for all the invoices for September, for example. But still, in that scenario, even if you do it for a full month, you might want to use this accounts receivable. Let's say, for example, it's paid in October. So, even if you do the actual registration in your accounting software with some delay, or for a full month, not daily, it depends on the routine of the hotel. But the point is, accounts receivable will still be used. Okay, so on the day when we make the sale, we list the sales minus plus in accounts receivable. Fine. Now we expect to receive money at some point. Once the customer pays the invoice, what will the company do? They will do this. Now suddenly, plus in the bank, where do we put the other figure to balance?
And the accounts receivable minus 100.
Right. Which means, if we only made one sales, at the time we did the sale, minus 100 plus 100 in accounts receivable. Now we actually receive the money in the bank, plus here, minus here. This is now back to zero. No more money coming in.
Is it time for questions later, or do you want to
shoot
about this accounts receivable? In Sirvoy, as I understand it, you can create something similar to that when you export only invoices not paid. That's something similar.
Yeah.
And then you get a report, invoice report for that. And then you can also create, beside that, one with paid.
Right.
And my question is, if we have something similar to that, accounts receivable,
yes.
When it comes to the name, because we call it something else, this report.
So we will look at
created invoices not paid report. If you know what I mean, or if that.
Right. So once a hotel has enabled the feature of invoicing, this will show up. Chart of accounts, which is the ledger accounts. So here are the room types, all my room types. Then what? Any room types. So I can put a ledger account, this name for each and every. It could be the same, it can be different, depending on what the hotel wants. If we scroll down, here comes extras, can put ledger accounts. Payment methods. So I can put, no, good question. So we will look at the reports now in Sirvoy. If you go to invoices, and so you have cash receipts, unpaid invoices, paid invoices, credited or cancelled invoices, credited cash receipts. The difference between a receipt is it's paid instantly. The invoice is paid after X number of days. So if we go to accounting report, this is where the hotel will go to get this exported report we talked about. Something to give to the accountant and say, this is what happened this month. You have all the numbers here. So we have 3 different types of exports. This is only because I have many linked hotels. So we can ignore this. We select the date range we want this report for. Some hotels might do a daily report, others do maybe a monthly report. And we can choose to include cash receipts, invoices, and or invoice payments. Now here it says if you prefer to register individual invoices once payment is received, you will not need the invoice record and the invoice payment record. So these two, here we export cash receipts, kvitton. Here we export invoices, fakturor. Here we export payments of invoices. Those two last ones, we could choose to just ignore them. So that is what we talked earlier about, the choice. So the hotel, depending on jurisdiction, where they are, and the size of the business, at least in Sweden, they can choose. If I have a small business and I create an invoice for Niklas, I can choose, since my business is so small, I will not record that invoice until he pays me. Which means I create it today, you pay 2 weeks from now, only then, the 20th, will I record that invoice. Meaning I don't need a report, because it's just one invoice being paid, right? So based on the payments I get, I choose now to, okay, let's see, where was that invoice? He has just paid me. Okay, here it is. Let's now go to my accounting software, and I register this manually now based on that paper, the actual invoice. Okay, it was a sales here, and it affected my bank account like this. Which means I don't care about the invoice reports at all. I might still want to get a summary of my cash sales for a specific day or a month. In that case, I use the cash receipt export, which is, think of it like that, kvitton or fakturor, two different concepts. Cash receipts, invoices. The cash receipt is something you get when you cash up. The invoice, you wait for money. So the choice the hotel has is to not use these, instead manually register individual invoices. Okay, let's say I'm a big business, so I want to have the accounts receivable. I want to know what money is coming. What can I expect? Then I will not register things only when they are paid, obviously. I want to know even before. Then I will use these two. So I hope this is somehow has some meaningful information. Let's do 2017. And we only do cash receipt first.
PDF.
Yes. Okay, I go back here. Okay, PDF with detailed version. All right, we can compare these two. First, we look at the one where we didn't specify we wanted detailed information. So you see, or you don't see, but maybe you can enlarge. Each line here is a cash receipt created on August 30th, this much. Next, cash receipt. So this is a summary of all the cash sales I did through the last year. Go to the last page. And up a bit. Okay, summary for accounting. This is where the magic happens. All those different cash receipts, of course, had some types of ledger accounts. They had sales of rooms, sales of extras, but also a cash receipt also always have it always has the payment method, right? How was it paid? How did we receive the money? Was it through bank wire or whatever? So that information is kept in all those lines we saw. Here it's summarized. And you see we have the account, ledger account. We have debit column, credit column. So credit is minus, debit plus, which means these are sales. I've been lazy here, only putting numbers. These are different types of sales. On the negative, on the plus, we have cash register, bank account, another type of bank account, deposits, and the rounding. Yes.
All the sales in the long list above, did these transactions come from, what did they come from? Invoices or
Cash
not?
receipt. This report now is only cash receipts. We chose to only include cash receipts.
Which is
What
an invoice.
is-
You click on...
What is cash receipts?
Kvitto. So it's
Kontantfaktura.
Det kommer upp när du trycker på
Kontantfaktura.
skapa faktura och sen väljer du kontantfaktura.
Okay, and that could be a card transaction in the reception, or
it's the same thing as creating an invoice, only that the only difference is the hotel indicated that they got the money immediately,
okay,
paid today, not paid 2 weeks from now.
nothing receivable.
Or if they pay cash or if they pay with card, you can enter it in the cash receipt that you create as a receipt and as a...
So think of it. You go to the shop, you pay, you get your things, right?
Yeah.
And you get a receipt. So that is a receipt for you have already paid. An invoice is rather you go, you pick your things, and you pick the invoice, but you haven't yet paid. You will pay 2 weeks from now.
Yeah. So this
The accounts receivable is never involved when it comes to cash receipts, since we don't need to know that we will get money. We have already got it.
so when you get that money that you're waiting for, will that be automatically included in this one?
We will come to that because now we are only looking at cash. This export only had cash receipts, so we will always have got the money already.
But it would work the same way, right? It would work as a receipt for the client when you do get the money. Or
In the case of the invoice.
Yeah.
True. So we will come to the other scenario with invoices.
Right.
Ola.
On page 1, was there a minus transaction somewhere? Yeah, like 600. Oh, it's just because 680 and minus 600.
Okay, yeah. So this is a credited invoice, because another rule in accounting is that you can never, like we did here, you can't just erase. Rather, when we put the wrong figure, we had to do minus and then put the right one. So same thing with invoices. That's why we have this whole complicated concept of credit invoices. And
So the sum up in the bottom is some hotels, they can use this one for 1 year and simply add this to their accounting.
Yeah.
If it's corresponding with their bank accounts, like if they check it up or no,
yeah,
they're kind of
at least you could export for the full year, and at least you would know, okay, we sold this much, this much, this much, and we should have got this much into our bank account. But of course, other things that we are not aware of happens in the bank account. Fine. We will just compare. If you go up on this one still. So this was the export of cash receipts. But we only have the basic data. If you go to the detailed version here, each and every cash receipt now has its own negative side. we will always put whatever has been set up to represent accounts receivable. So the information we put in earlier, where it said accounts receivable, that information will show up here.
Is kundfordran set as default, or do they have to add it to accounting?
I think they might have to add it.
Because that's, we can talk about it later, but I think that's an issue. Cause
Yeah,
usually
it is.
some hotels,
All over the ledger accounts. We should suggest
they shouldn't be
something
able
better.
to create an invoice if they haven't looked
Yeah.
through the accounting. The account.
But the good thing with this one is that I believe if you go in and edit it, it will immediately update in this report.
Oh.
So what this report does, whenever you export invoices, it summarizes. We can also go down to the bottom. It summarizes all the sales and it puts it into accounts receivable, which means accounts receivable now has a big number. How do we get the money from accounts receivable into our bank account? So we go back here, we go to invoices, we look at an unpaid invoice. What the hotel will do when they receive money is to go here, open this invoice, and indicate payment received, right? So we do that. And pick a type. Each of these types have a corresponding ledger account entered in settings, right? Pick any, save. We go back to invoices, accounting reports. So when we exported the invoices, what happened in our bookkeeping, in the accounting software, we sold for a lot of money here, and it ended up in accounts receivable, right? Now we export instead the invoice payments report.
Yeah.
We can do it only for October now, since we added it today.
But the invoice was paid right now, so it shouldn't be in the
Exactly, but we haven't told the accounting software yet.
receipt. Okay, so we're going to do that now.
Yes.
Okay.
So now we export for October.
I'm tired of this.
All the payments received in October. The payment we just registered shows up here. Payment of invoice 4/10/15, 4th of October. We go down to the summary. What does it tell us? To move the money from accounts receivable into the bank. Or if we had picked another payment method, Stripe or whatever, then it would tell us move the money from accounts receivable into Stripe. So we do that. We do minus here and plus here. So now accounts receivable is back to 0. The money is in the bank. The sales are still there. That's the concept. A bit complicated, and it's not expected that you grasp it all like that, but the file is there to review. And let's see. Yeah, so just to summarize, accounts receivable only relates to invoices, since invoices are something paid in the future and we want to know what can we expect. Cash receipts are paid immediately. There is no reason to use accounts receivable for those. There is no money owed, we already got it. Rather, the sales can be registered as received directly. And we use the report to summarize those sales. Credited invoices, we talked about it. It's a way of reversing what happened, since we cannot just delete things. Good. Questions?
So what about this? Are we going to? Are we supposed to help hotels?
Right.
What are other questions?
So usually the hotel, if we go back to the invoice report, hotels might contact you saying, I exported a report, but it makes no sense. Here it's just blank. I don't know what this number is. It doesn't say anything because they haven't entered any meaningful ledger accounts, names or descriptions for the ledger accounts. Or they might say, I want to know what sales refers to single rooms, what sales refer to double rooms. Okay, so all you need to know is to have a basic understanding of the concept of ledger accounts, and then be able to tell them that, okay, if you want to separate those two types, you will have to set one ledger account name for the single rooms, another one for the double rooms.
I got a customer a few days ago from Germany. They said they have to know exactly how much tax they paid. So then they would have to enter an account for that specific tax, right? I think you did it before.
Yes. So we have two types of taxes in Sirvoy: VAT, moms, and what we call surcharges. So it depends on where you are. In Sweden, we use VAT, which means if it's 100, the hotel will list 100, but actually something like 12 kronor of that is VAT. And they can indicate in Sirvoy that this room type has this VAT rate, and they can also assign a ledger account to that VAT rate. So if we sell a room which has VAT, it would look like this. Or let's just use sales is the ledger account. Let's say 88 kronor is the actual value of the room. VAT was 12, and the money went into the bank account, let's say 100. But this way the business will know that, okay, we have 100, but actually we owe 12 kronor to the state. But, okay, so that is VAT in Sweden. If you go to the States and you look at the room rate, $100, that's a good rate. But when you check out, suddenly you pay 120, let's say. And they tell you that we have something called state tax and things. So this is the price. Okay, so in that case, sales would be 100, and they would call it something else, state tax 20, and in the bank they would get 120. So surcharges is the latter type, where it's added on top of the price. Taxes included is this one, where it's part of the listed price. And the difference is when the guest books, in this case it will show up at the bottom. In this case it will not show up at all, it will just show up on the invoice. So yeah.
And they must add an account. If they add a surcharge, then they have to go to account because that's what this...
Exactly, and chart of accounts. Yeah. So it's a bit cumbersome here, right? And even unclear.
We have talked about to add default names here.
Yeah.
If you activate the invoice.
So here is my two surcharges, and we could imagine to just suggest the dummy name, surcharge, and use the name of the surcharge, or
But if they forget to add this, can they do it like after a few months and it'll still show up on the accounting report?
Some not.
The VAT shows up.
If the invoice was created, I think, then it has to be changed on the invoice. So, but yeah, this is really an area where we should make a lot of improvements. But this is where it currently stands. Okay, last part of this.
Wait, a question. So if they don't have anything put on kundfordran, they cannot see what is coming in soon.
If they
will still see it under.
come again.
If they have not stated any ledger
Okay.
account in kundfordran.
The only effect that part has, adding the name for the accounts receivable, is when you export
Yeah.
your
accounting
invoices. It would show up maybe as blank, or maybe we add something, a dummy name, I'm not sure.
But the sum will still show up when if you pick invoice only.
Yeah, so sometimes you
Some-
find amounts in the reports which has no name at all.
And in the total, under invoices report,
even.
there you will find the total.
So
that
that's
will
an
not be
indication that something is wrong. And you might be able to help the hotel to identify where the ledger accounts has to be added.
So that's easy for us, as Steven talked about earlier. If we help them activate the invoice, we can just tell them that you also need to set up the accounts. Otherwise, we know they will get back to us after a few months.
Exactly, yeah.
Screaming like his child.
And we should have some type of dummies. Accounting quiz. What is the purpose of accounting? The tax authority requires a company to keep accounts, or it helps the company to keep track of incomes and expenses, or all of the above. Whoa. Hey, this is okay.
afraid.
Fine.
Wrong now.
We don't need to do it now. We can just read through. What is a ledger account? It's a book full of numbers. It's where the bank will keep your money. It's a way of categorizing transactions, all of the above.
Categorizing.
Well done. What does double entry refer to in the context of accounting? Transactions always have to be entered into two parallel books or systems to reduce the risk of losing accounting data. Or a positive change in a ledger account must always be balanced with a corresponding negative change in another ledger account. Or an accountant must only enter a transaction once. Entering the same transaction twice would violate the double entry rule.
Good question.
You're making it difficult now.
It's the middle one.
Guesses. Middle one. Well done. How many ledger accounts can be part of a single transaction? Yeah.
I didn't raise my hand.
How many
Any more
ledger
options?
accounts can be part of a single transaction?
2, right?
2? Any other guesses?
Ah,
Right.
okay.
So not far from the truth.
This is good with a quiz.
What is accounts receivable? It refers to the duty a company has to provide the tax authority with their accounts. It refers to payments that are received in the company's bank account. It represents sales that the company expects to complete in the near future. Or it represents completed sales, but the money has not yet been received in the company's bank account. That one. Good. What is the purpose of an accounting report? It shows how much money the company has at the bank. It shows all the ledger accounts. It is a summary of a number of transactions, all of the above.
All of the above.
Number 3.
Yes. What? Number 3, it's a summary of a number of transactions. It doesn't show all the ledger accounts unless you actually used all the ledger accounts throughout that month. It doesn't show how much money the company has at the bank. It only shows what they can expect to receive in the bank from sales that occurred in Sirvoy. If grandma sends money, it won't show here. Credit and debit have to match up, or are ways of describing how amounts decrease and increase, or can both be used on the same ledger account depending on the purpose, or all of the above are true. All of the above, yes. A negative total balance in a ledger account indicates that the company has lost money in one way or another. True or false? False. What steps are involved when creating an invoice and using accounts receivable? The invoice is registered in the account once payment is received into the bank account, or the invoice is registered in the accounts as paid immediately, or the invoice is immediately registered as paid. Later, when the money is received, it is registered as sales. Or the invoice is immediately registered as sales and considered money owed to the company. Later, when the money is received, the what?
I'll take it last
Later, when the money is received, the money owed is reduced accordingly.
Last two ones.
Yeah, you can even see it as the green tick. So, well done.
well explained.
It's a mess, but you will. It will become clearer and clearer by time.
I loved it, and I liked it when it ended as well.
Andreas.
How many of the customers use this? Is it like 10% or 90%?